Yo, yo, what's up, everybody? How y'all doing? Welcome to another episode with Black Diamond FX. And it's your boy Devin B on the mic on the ones and twos. All right, so today, now if you watched my last video, we went over the I in ICC, and that I stood for indication. All right, so today we will be going over the first C in ICC, and that stands for correction. All right. So let's do a little recap right quick. But before we do the recap, man, y'all go ahead, hit that subscribe button, hit that thumbs up, share this with about 100 of your friends, share it all over your social media with all your trader friends. Tell them to subscribe. Holla at your boy, show some support. All right. Now, back to the meat and potatoes. So let's do a recap. So the first thing, the I is for indication, right? So remember, the easiest way to find indication is at breaks of structure. So you want to go in that 1 hour, 2 hour, three, four, whatever your higher time frame is. All right. That's why you want to look for your indication, whatever you decide to use as your higher time frame. All right. And you want to see what direction the market is moving in. So you can, if we focus on this range from the low to the high, this swing, from the low swing to the high swing, all right, you can see we have several breaks of structure, all right, and it gives us several areas of indication. All right, look, we got a break of structure here, indication, boom, all right, we got breaks of structure here. Everywhere these highs are broken, all right, we get indication, all right, another high broken here. Hold up, my bad. All right, another high broken here, indication. All right. Everywhere those highs are broken, we have indication. And even once it breaks, watch on this side over here, we have indication here. All right. On the low side, indication, another indication here. All right. Excuse me. All right. So everywhere we get breaks of structure, we get indication. Now, after we get indication, next we get correction. All right. And the correction is the pullback. The correction is the pullback. And it pulls back into the previous range. All right. Now, check this out. So, just a while ago, I told you guys we have this range. We have from here, this low, to this high, right? Now, inside of here, we have different ranges. We have some mini ranges or intermediate ranges, all right? Every time we get a move up, impulse, correction, the impulse, that's a range from the low to the high, all right? Then we get the correction goes up, breaks the high, all right? That gives you that indication. It also gives you a new range, all right? So always remember, your pullback will be your correction. In an uptrend, that pullback down will be your correction. Now, let's take a look. Because if we're looking at this, all right, remember I showed you guys, we get indication and then we get that pullback, right? Let's go, let's make it a little bit bigger. All right. So we go boom, indication, down, back into the range, and that's your correction. All right. It's simple, guys. It's real, real simple. Matter of fact, I'm gonna do indication and correct, not indication. I'm gonna do correction and continuation together in this video. I'm not gonna make a separate video for correction because it's something that I want to show you guys, and it kind of goes hand in hand. All right. So this is gonna be continuation and correction and continuation. All right. But first we get the correction. The correction is the pullback. Now, the correction is the pullback. Now, I want you to to notice something. All right? Because correction really isn't that hard. Correction don't take that long to for me to teach. And it should be fairly easy for you guys to follow, to find, as long as you know what a pullback is. All right? But I want you to notice something. All right? Notice how when we get that correction, it comes down into like an order block fair value gap. All right? Right here, we have it. Right here, we have it. Okay. On this side, we broke through. All right. We broke through with very strong candles with strong volume. But then look what happened. We got the correction to the downside, to the sell side. All right. That's our indication letting us know that price is about to sell, or price maybe is about to sell. All right. But then look, we get a correction, pull back into order block fair value gap. Same thing. Look at here. Indication here. We get correction because this is the pullback, right? Price is going to pull back into that range. This range from here, from the high to the low you range. Look what happened. Boom. Fair value gap, order block. Y'all see that? It happens time and time and time again until the market reverses. All right. And look right here. Okay. So here we got, excuse me, you guys. So here we got this indication on the bottom side, but look what happened. It broke through on the other side. All right. Remember, price is coming down. This our pullback. It broke through on the other side, right? So now we got top side indication. So we got, because look, we got bottom side indication here. All right. And we had a little fair value, a small fair value gap there. But then look, this shot past it, right? And then it broke through. So once we shot past it and we break through and we get this top side indication up here, let me mark it out for you guys. I'm sorry. I'm sorry. I apologize. So we get boom. All right. Boom. Because this is our pullback. All right. Remember, we're on the downtrend. We're coming down, down, up, down, up, down, up. All right. And look what happens. So we got sell side indication first. All right. So we thinking, yeah, we waiting for that sell, right? And then we look and then we watch and then we waiting and we see that price came up. Now this probably might have faked you out right here. But if you really look at it, there's really nothing in here, like no kind of internal liquidity, unless it's on a lower time frame. There's really not internal liquidity there for us to take. All right. There's nothing there for us to take. This fair value gap was filled right here. All right. This is just a wick. All right. This is balanced market right here. All right. But look what happens. Boom. We get a top side, buy side indication. Right. So now we're going to flip. So now we're going to look for somewhere as price starts coming down, pulling back, correction. We looking for fair value gap order block. Oh man, y'all, excuse me, y'all. I apologize. I sincerely apologize for all of this coughing. All right. But look, now as we're correcting, this is what y'all do. Once we get indication price starts to correct, start looking inside of that range for somewhere price is going to go to, some area of liquidity. Once again, fair value gap order block, supply zone, demand zone, something like that. All right. Look, we have fair value gap. You can call this whole little area right here order block. I'm going to mark it. This last real down candle, I'm going to mark that doji with it. Boom. Look what happens. And then look, boom, we get another what? Indication right here. See that? This is your continuation. Once you get, once you enter and the price starts to go up, that's your continuation. Your continuation is your actual trade. All right. Your continuation is your actual trade. The start of continuation is where your entry should be. All right. The start of your continuation is where your entry should be. And then look, check this out. We get another break right here. All right. We broke that high. And what happens? Now price came, look, fair value gap order block. Sometimes it's going to hit the fair value. Sometimes it's going to hit the order block. Here, we just hit the fair value. All right. But look, price consolidated, but still it ended up going all the way up there. So y'all see that? That's your continuous correction. Correction is your pullback. All right. Correction is your pullback. Then your continuation, that's your trade. You look for your entry in your liquidity area. All right. Now, I'm pretty sure you guys are wondering. All right, so we know how to find we know how to spot the indication, we know how to spot the correction, we know the continuation is the trade, but Black Diamond, you didn't tell us how do we enter the trade. Y'all know something? That's a good observation. I didn't tell you guys that. But, but check this out. I'm about to show you. The same thing you look for when you're looking for indication, correction, continuation, you look for the same thing on the for your entry, just on a lower time frame. Watch this. Let me show you guys something. All right. So look, see how price is going up. All right. So we get the indication, the correction, the continuation. Right? See that? Indication, correction, continuation. Watch this. Let's go to the 15-minute. I'm about to blow y'all minds. I'm about to blow your mind. Look, look, check this out. This is a 15-minute time frame. You can see it even on the 15-minute. Indication. Boom. Correction. Pull back into fair value cap. Fair value gap. Boom. Look. Same thing right here. This is the pullback. We mark the pullback. Look, we get indication up here. But look what happens. Price comes and it starts coming down, right? So we get a little something here, but then it starts to reverse again. All right. It starts to reverse. Let's go to the 5. I really like the 5-minute. And the 5 minutes is where I normally get my interest. But I wanted to show you guys. I wanted to show you guys that. All right. Now, remember on that high time frame? Continuation. I mean indication, correction, continuation. Look at this. Now we inside liquidity. Remember, this was our order block fair value gap area, right? Our liquidity area. Where's that low? So the lowest point was over here, right? So now look for the same thing. Boom. Look at this right here. This is on 5 minutes. Indication, correction into fair value. Because look, you got nothing here. You got a little small fair value, but it's not much. But you can put your stop loss here. Indication, correction down into fair value. That's your entry. That's your entry right here. You get in this trade here. I'm gonna put a horizontal ray right there. Getting your trade there. Stop loss underneath. That's 5 minutes. All right. Where's your target? Where's your high? Boom. Your target is right up there. All right. Let's take a look. Gold. So if I targeted that, boom. Look at that right there. You would have hit it right there. You would have got in your trade at 12:15 a.m., midnight. Hit your take profit, 12:35. So roughly 12 hours. Roughly 12 hours. But how much money did you make? Hold on, let's see something. Let's do a hypothetical. Buy. If we buying from here, 4083.5, let's do a buy limit. Let's see how much money that would have been. And only one contract. One contract. This is a mini. One mini contract for 083.5. All right. That's a buy limit up to 4139.9. How much money is that? 4139.9. $5,640, y'all, in 12 hours. 5,000. Well, let's just say 5,600. $5,600 in 12 hours. 12 hours. At my former job that I resigned from back in 2021, I was making 40 something dollars an hour, working what, 12-hour days? Some days even longer than 12 hours. Some days were 18 hours. In 1 week, you know how in one week, I don't recall ever taking home a $5,600 check. I'm talking about in a week where I work like 3 days or 4 days, with overtime and 40 something dollars now. I'm talking about 12-hour plus days. 12 each day, 12 hours, some days even longer, depending on if we was having problems or not, right? And you would have done this in one and a half a day. $5,600 in a half a day. Come on, man. Tell me why you wouldn't want to trade. Tell me why. Indication, correction, continuation, man. Easy. It's simple. But you have to get in the charts and learn. You have to practice it. You have to get good with it. Y'all saw this entry all the way down here. Watch, what was this risk to reward? For all of you risk to reward gurus out there, if I entered here and I put my take profit here at this high and I put my stop loss at this low, that's a 1 to 6 right there. 6.8, almost a 1 to 7. That's real good. That is real good. I be seeing people doing like 1 to 1s, even some people having like negative, like how y'all do that? Like your risk should never be more than your reward ever. Like I don't even like 1 to 1s, man. 1 to 1s, I mean, some people love it. I don't like it. I don't like 1 to 1s. I need more. I need more. I try to squeeze everything that I can get out of the market. All right. Look, either one of these highs you could have targeted. This high, this high, this high, this high. And if this was 5,600, imagine what this was over here. You know what I'm saying? Although this would have, ooh, right before market close. You would have hit that right before market close. All right. If you were a prop firm, you would have to take profit there. But if you're in your own account, as long as you got the overnight margins, you would have been good. All right. But man, I'm telling y'all, man, this is it. This is it. Let's see if we can find another one. Let's look for another example. All right. Now this was a buy example right here. I know somebody on YouTube on one of my other videos asked for a buy example. Perfect. Right here. And look, see you had this, and this was coming off a reversal. This came off a reversal. Y'all see how y'all can catch reversals too? And there's no way you can be fooled. Higher time frame. Mark your levels on that higher time frame. Your highs, your lows. Mark it on that 1 hour. You can even do 30 minute if it's a little more detailed for you. 30 minute. Sometimes I even mark the 15 minute. But you have to do what works for you. Let's look at this right here. Now this is current. This is currently happening with gold. Let's see what's happening with gold. Gold is in a downtrend, right? All right. So look what happened. We came down. We went up right here. I'm gonna mark. So we had indication here. All right. Now we came down with this big old long wick. All right. But then look what happened. We came back up. Look, order block, fair value, right up in here. Right here. This is the trade I missed last night that I wanted to catch. Look at that. Boom. You got two. You had two entries up in there. All right. Look, you even would have had a little entry right here. But then look what happened. Look at this. Look at this. All right. So we get a little sweep right here. Price went up. But then look. Look at this. Look what we getting right now. Indication right here. We got indication right here. This is live now. I need a new computer, y'all. See, that's why I need y'all to subscribe so I can get me a new computer. Y'all subscribe, y'all support is going to help me get better equipment so I can come with some better videos for y'all. Which this is not bad. You know what I'm saying? I think this is some pretty good videos that I'm lacing you guys up with, but I do need better equipment. All right. So show your boy some love and hit that subscribe button. You know what I'm saying? When I drop them affiliate links, use my affiliate links so I can go ahead on and get y'all some giveaway accounts. All right? Because the more like once I drop the affiliate links for the prop firms, the more y'all use it, the prop firms see that and they want more customers, they want more business. So what they would do is give me I would request some accounts to give away and they will give me some giveaway accounts and I can have giveaways. That's why I need y'all. I need subscribers and I need you guys to once I start dropping those affiliate links, just use those affiliate links as well. I have a couple. I haven't posted them on YouTube yet, but I will be. All right. But back to what I was saying, look at what's happening right now. See, we have indication here on the downside, right? So now we're getting correction. All right, correction to where? Man, we got this big old fair value gap up there. You think this ain't coming up there? Y'all see that right there? All right, let's go to the 15 minute. All right, and look, see, this could have been like a little lower time frame indication, little low right there. All right, well, let's see. Look, price coming up. This is gonna go up into there. Now, let me show y'all something. If you get something like this, see, we got this big old, that's a big fair value gap. First of all, it don't matter what price go in there, because I'm going to look for the same thing on a smaller time frame, just like I showed y'all. But if you want an idea of where price may go, this is not always 100% accurate, but it is accurate a lot, and it gives you a good idea of where price may give you your entry. Here's what I use. It's called optimal trade entry, the Fibonacci. All right. So the settings for your optimal trade entry fibs are 1, 0.79, 0.62, 0.5, and 0. All right. Now, these settings here are called optimal trade entry. If you saw, I have more settings as well. Those are, I use those to find targets sometimes. I combine optimal trade entry with standard deviation fibs, and I call it my Black Diamond All-Star fibs. If y'all want the settings, let me know and I'll give them out to you guys. I'll give you out all the settings for my special fibs. But look at this. In between, and I have this gold for a reason. That I have my entries gold and I have my target areas gold. All right. Entry between the 6.9 and the 6.2 and the 7.9. Look what we got in between the 6.2 and the 7.9, right underneath an order block. Come on, man. It don't get no better than that. All right. For those of you that don't know, I'm from Louisiana, so I might have a little accent. But it don't get no better than this. Look at that. Boom. So if you want an idea, now that doesn't mean price is gonna go perfectly in there. It could fall short. It could go a little bit above because we do have order block up there. It could go a little bit above. All right. But this gives you an idea of where price is going to where you be trading from, where you be looking for an entry. All right. So just kind of keep an eye on it. But that's what I'll be looking for somewhere, gold to come up to somewhere. Now, can we buy up there? Because that's a nice ride up there from 42.16 to let's say 42.40. That's a nice little ride. So it's possible you can. I wouldn't. I would just be patient. All right. I would just be patient. Don't try to force nothing. Don't get greedy. All right. And just wait on it. All right. But I mean, that's pretty much it, you guys. That's pretty much it. It's simple, y'all. It's not like you need a whole complex course on trading this, man. It's easy. It's simple market structure. Market structure combined with liquidity. Market structure combined with liquidity. All right. You get the break, you get the break above in the bullish market. You get the indication. Once that candle breaking close, everything above here, that's your indication. You wait for price to come back. Where's price coming back to? Any liquidity inside of this range. All right. That's internal range liquidity. All right. Remember, I marked the pullback. I marked the high of the pullback and I marked the low of the pullback. All right. If price goes up, comes down, hit that liquidity, you drop to that lower time frame, that 5 minute, look for that same thing, just like I showed you guys. Get in your trade. If price does this, bloop, all right, cool. Then we look for liquidity. Now this gives us sell side indication, right? So now we're looking for liquidity somewhere in this range, from here to here, from that high to that low, to take the sell down. All right. You just got to adjust. You have to know how to adjust, adapt to what's happening in the market. All right. And I'm gonna show you guys that entry one more time. Go back to the 5 minute. I know you're probably gonna have some questions on that entry. I think I'm gonna do another video with the entry that covers that. I mean, it's not hard, it's real. See, when I do videos, I try to get to the point real quick. Look at that. Look, bam, this was your low. This was your low right here. This was your lowest point, the low of your swing right there. All right. So this low came up, came down, broke, gave you indication that it's going to continue going up, came down into your fair value. Put your stop loss down here or down here, either one. Take your trade. Aim for your high. Boom, right there. Easy money. Easy money. Taking candy from a baby. I'm telling y'all, this is how I've been able to pass so many prop firm accounts. I'm telling you, just this year, I've passed just in this year since I've started trading this, man, I've been killing the prop firms, y'all. I'm talking about killing it, getting payouts. I'm with Take Profit Trader. I'm with Trade Day. I'm with who else? Blue Guardian Futures. Um, I've also traded with Funded Futures Network. Now they use Rhythmic. That's their trading platform, Rhythmic. I don't really care for Rhythmic too much. Um, Somebody, I forgot who it was. It was another one I tried too, and I used Volumetrica, Volumetrica. Volumetrica isn't bad. And I'm gonna tell y'all, I really like Project X. I do. Um, but of course, if you've been following. Project X is going to be exclusively with Top Step and starting in February, I think. So, I mean, Ninja Trader, Tradeovate, TradingView, I like it. I stick with it. A Volumetrica, if you got to use Volumetrica, it's not bad. I don't like Rhythmic. I don't really understand Rhythmic. It's just, I don't know. Like, I like what I like. Now, Tradeovate, I can connect right here to TradingView and trade is real easy. Project X is easy. I like how you can quickly move your stop loss and you take profit on Project X. And it shows your like when you enter a trade and you do your stop loss, it'll show you how much money your stop loss is and show you how much money your take profit is as well. But this, you guys, my next video will I'm gonna focus on entries. All right, my next video I'm gonna focus on entries. This one, it was supposed to be correction only, but I decided to do correction and continuation because they kind of go hand in hand. All right. And then your entry comes in between your correction and your continuation. See, this is your correction. Your pullback is always your correction. Your entry is going to be in between your pullback and the actual trade, which is your continuation. All right. 5 minute, look for the same thing. Indication, correction, boom, continuation. Easy money. Easy money, you guys. I'm telling y'all. Try it out. Try it out in paper. Let me know what you think. If you like this video, give me a thumbs up. Don't forget to subscribe, share with all your friends, all your trading friends, all your social media. Just spread it, y'all. I need you guys to spread the word Black Diamond FX. Thank you, and I'll talk to you guys later. Have a great day.